So I have around £40,000 in my Trading 212 ISA at the moment, and I have another £60,000 with another provider. That means I have just over £100,000 saved in my stocks and shares ISA at the age of 30. Now, I've recently been toying around with the idea of what it would take for me to retire completely tax-free just using my ISA. So in this video, I'm going to be exploring how much it would take to actually retire, what age I could possibly retire on, and all the other variables involved in answering such a question. Now, I've chosen to base this video around Trading 212, so if you would like to sign up and get a free share, use a link in the description down below. Or if you've signed up recently and haven't received a free share, use my promo code JUBAIR. Now, of course, you can use whatever stocks and shares provider that you wish. You can choose to have your money distributed in a number of them. I made a video on the best stocks and shares ISA, so if you don't like Trading 212 for whatever reason, you can check out this video over here, which gives you great alternative options. So anyway, here's my Trading 212 account. So if I click on this arrow over here, you can see that currently my ISA utilization is 100%. Pretty much we are at the beginning still of the tax year, meaning that I have £100,000 within my ISAs, but I can't actually deposit any further currently. So I'm gonna have to wait a whole year before I start doing that. That technically gives me an advantage into having some extra time to fill out my ISA. And if I'm going to retire 100% tax-free, I'm going to have to maximize my deposits every single year. Now, of course, if you didn't know, currently you are allowed to put, as a UK tax resident, £20,000 per tax year into an ISA. So no matter how much it grows through capital appreciation, through dividends, or through interest earned on cash payments, you are not liable to be paying extra tax when withdrawing. And of course, unlike a pension or a SIP, you don't have any restrictions of what time frame you can withdraw it, meaning that I want to see how soon I could possibly retire. So £20,000 per year is not a small feat whatsoever. It is quite a lot. In fact, that is around £1,667 per month saved, which means you're going to have to make a whole lot more than that after your expenses and your outgoings. You're going to have to save around £1,700. Now, one method that I personally use that kind of helps me reach that £20,000 per year allowance a bit sooner is to make full use of my Trading 212 Invest account. Now, here is my Trading 212 Invest account, and as you can see, my current account value is £13,336, meaning if I were to sell everything at this instant or when market opens on Monday, that is how much I will have liquid. As you can see, I'm only £7,000 away from actually getting that £20,000 that I can then stuff into my ISA as soon as the new tax year opens. However, by making full use of my Trading 212 Invest account, I can benefit from capital gains, dividends, and interest on cash payments outside of my already maxed out ISA. Of course, all of these are liable to be taxed. So if I make more than £3,000 in capital gains, for example. Furthermore, of course, through dividend payments, I have a tax-free allowance, just like everyone else, of only £500. Anything in addition to that is going to be liable for dividend tax that is also based on my income tax bracket. And of course, any interest earned on cash is also going to count towards my personal savings allowance of £1,000. Any addition to that, then I'm going to be liable for paying tax again. Now, by utilizing my accounts outside of my ISA, I can benefit from the stock market going up in that year, but also capital is always at risk. The stock market could always go down that year too. So you always have to balance your risk as an investor or someone looking to retire at some point in the future. Generally speaking, however, though, in the short term, the stock market doesn't always return us a positive value. Therefore, do take that into consideration before putting your so-called future ISA money in your Trading 212 Invest account. So the main question is, when can I retire tax-free? So as we know, we only can deposit a maximum of £20,000, meaning that is the maximum amount per year that I can actually deposit. So that makes the calculation a lot easier because it's not about how much I'll need, but how many years I will need to keep depositing until I can retire. Now, when it comes to the question of when can I retire, that is an incredibly difficult question, and it completely determines on what kind of person you are, your priorities, and your goals of retirement. First of all, you're going to have to ask yourself a lot of inner questions. Now, what do you see yourself as retiring? A lot of people think of retiring as, laying back and doing nothing. Well, in actual fact, if you've worked your entire life, you might not want to let go of everything you've done previously. However, only do things that you actually want to do. So retiring does look different from person to person. It also depends on what your priorities are. Why do you want to retire? As an example, I could tell myself that I want to retire early because I want to spend the majority of time with my wife and kids, for example. For someone who is working a particular job, let's say 9 to 5, the time I'm spending on my job is taking away from me spending time with my family. Therefore, in retirement, I want to have enough to allow myself to continue seeing my family. You also have to take into consideration that as your kids grow up, the amount that you'll need to expend onto them might decrease in the future as the years go by. Therefore, you will need to come up with some sort of value in your head that will cover all your expenses plus maybe 10 or 20% more. You also need to contribute to your willingness of retiring early. That means making certain compromises. Everyone wants to retire with a lot of money, but it isn't always feasible because it is all based on how much you actually deposit within your accounts that grow or how many properties or investments you have. Now, in my example, I'm going to keep it really simple. I'm going to assume that the only investments I have are in equities. I'm not going to factor in pensions or anything like that because, of course, I want to see how soon I can retire and I don't want to put any money into property that could otherwise provide an income. For my example, I'm putting just all of my money into stocks and shares ISA to max it out per year and to see how quickly I can retire. So in my example, I'm willing in retirement to spend in today's money £2,000 per month, as I think that will cover all of my expenses. And if it doesn't, I'm willing to compromise on location because my main priority is to spend more time with my family. So the annual figure that I need that needs to be generated purely from my investments in my stocks and shares ISA is £24,000. Generally speaking, something like the S&P 500 per year averages around 9% over the long term. When it comes to retirement, however, you can't just rely on these figures because certain years the S&P 500 actually drops by 20 to 30%. This means that once you have your pot and you're ready to retire, you might want to actually diversify into bonds or things that will hold their value for longer even during market crashes. Let's just assume that we need to hit a certain number and then we'll figure out everything later on, including inflation. So if you expect 8% per year in the stock market, we can assume that we can take out 4% per year quite safely without affecting the size of our portfolio, meaning the portfolio will still grow. And if we just take out 4%, it wouldn't hurt things in the long run. So let's do some simple calculation, £24,000 per year. So the number that we need to divide it by is 0.04 because that is 4% of the total value of our investment portfolio. This gives us a number of £600,000. So that's how much I'm going to need to actually comfortably retire. However, I personally always believe that you do have to have a sort of buffer because you can't really predict anything in the future. So for this reason, I always say to times it by at least 20% to have a buffer that will account for inflation and things like that. So now if we times that number by 1.2, we get £720,000. However, knowing me, I still want a bit more reliance and assurance, and I want to hit £1 million before I can comfortably say I want to retire off my money. So now in order to hit that number, we're going to have to deposit £20,000 per year. As I said in the beginning, that is going to be my main goal that I try to achieve every single year. So now if I go onto Google and type in compound interest calculator, we can use any of them, but the first one that comes up is very good. So here I can change my value to pounds, and currently I have an initial investment of £100,000, 100, 1, 2, 3. Per year, I can assume that I'm getting around 8%. In the past 4 years since I've opened my ISAs, I've always gotten more than 10%, but realistically, we don't know what's going to happen in the future, so I can't just assume that. So let's change this time frame to 10 years to see if I could retire at the age of 40. Here we can see our deposit amount and we can change that to yearly, and then we can put in 20,000, so that's 20, 1, 2, 3. Deposits made at the beginning is because I max out my ISA at the beginning of the year, and my annual deposit increase is not going to be anything because of course we are constrained by the £20,000 per year allowance in our stocks and shares ISA. So now if I press calculate, we can see that in 10 years I will have a projected value of £540,247, which is extremely close to our £600,000 that we actually need to retire based on what we think we need in today's money. Now in 10 years, of course, there will be inflation, so this actually will not be enough, but it's amazing to see how just in 10 years, I will be a lot closer to retiring if I can keep depositing £20,000 into my Trading 212 ISA. Now, okay, 10 years is not actually a sensible amount to invest because we run the risk of a lot of fluctuations every 10 years. So the value of our portfolio might go down within that time frame. So let's increase this to 15 years. So at the age of 45, can I actually retire using a stocks and shares ISA? So you can see that in 15 years, just 15 years, I will have a projected value of £932,000 if I keep up depositing £20,000 per year in my stocks and shares ISA. This is actually enough already just in 15 years to cover all my basic expenses and technically retire from the scene just aged 45, which would be absolutely the dream. As we mentioned before, we only really need £600,000 to retire, but the extra amount will give us some leeway for unexpected expenses. For example, maybe children getting married or something happening outside our control. During that time, I would have deposited a further £300,000 and I would have made £532,000 pure profit just based on interest. Now let's see what happens if I want to seriously retire by the age of 50 and keep depositing £20,000 per year until that age. Now you can see that if I keep continuing to deposit into my ISA, I will have a projected value of £1.5 million. So that is £1 million just based on interest, but I would have deposited a further £400,000. Now if we do some quick math, £1.5 million, and if we want to take out 4% of that per year, we have a tax-free yearly income of £60,000. If we divide that by 12, we have £5,000 per month to play around with, which including inflation, I personally believe is going to be enough to retire off from. So the answer to the question is how much will it take to retire? And that is a contribution of £20,000 per year for just 11 years. So in 11 years, if I continue doing that, I will have a value of around £606,000. And this is just in 11 years, retiring at the young age of only 41. However, of course, retirement is such a personal thing and it is up to you to decide on what compromises you personally are willing to take and what you aren't willing to take. So make sure to check out some of my other videos and I will see you in the next video.